Good morning, good afternoon, good evening to all the attendees joining us today. A very warm welcome to everyone. We are delighted to have you with us for this session. Let's wait for a few more minutes to allow others to join in, and we'll begin shortly. Yep. All right, let's get started. Once again, very warm welcome to everyone joining us from different parts of the world. And we are truly excited to have you here. So, without further delay, let's begin today's session. So, first, let me introduce myself. So, I'm Nihar Ranjan Singh, and I lead the strategic partnership and new business development opportunities at Vayana Digital Assets team. So, over the past several years, I have had the privilege of working closely with global banks, asset managers, fintechs, and regulators, helping them explore specifically the real world applications of tokenization, stablecoin, CBDCs, and digital assets, specifically in cross border payment and the capital market space. And I am not here alone. So, with me is my colleague Vedant is here. So, who is our product lead for digital assets team. So Vedant has been deeply involved in architecting our modular tokenization infrastructure. So he will walk you through how the platform works, what makes it unique, and give you a demo of its capabilities. So between the two of us, our goal today is not just to show you slides, rather it's to demystify what tokenization is. And so once this webinar ends, we want you to leave with a clear understanding of why tokenization it's not just hype but already mainstream, what specifically the institutions across the world are doing today, and how our flagship product Vayana digital asset platform helps you move from experiments to real adoption. So yeah, so let's get started. So as I walk you through the first part of the session, so keep in mind one simple idea that tokenization will not remain something new, rather it will simply become the way markets operate. Okay. So let me start with a very simple but powerful thought. As you can see in the slide, that everything you see as an asset that will be tokenized in the future. We have seen this pattern before. So just look at the communication space. So 20 years ago, making an international call meant booking a line, paying a heavy charge, and wait for numerous hours. Okay. And today you open WhatsApp, make a free video call instantly. What exactly changed here? The rails behind this communication. Exactly the same thing is being happened with finance. Okay. Once upon a time, we know, mostly in the 60s and 70s time, a share was a paper-based certificate. Now we have a dematerialization, demand-based certificate. Suddenly, all these shares became digital, liquid, and far easier to trade. What exactly now the tokenization brings in? So tokenization is that next leap in the capital market space. So it's not just about digitization, rather it's about programmability, compliance, and global accessibility baked into the every fabric of the asset. So when I say tokenize everything, so what exactly it means? So it means from a corporate bond in Singapore to a luxury real estate unit in Dubai, Malta, or to a money market fund in New York. Also, you can say any commodities like gold in London Vault. Even it happens that we have any intellectual property rights in India. All of these real world assets can live on chain as token. That actually changes the game. So it changes who can invest, how fast these assets can move, how the risks are being managed, and ultimately how the whole financial markets operate. And we are not talking about a future that is 10 years away or 20 years away. We are talking about what is unfolding right now. Okay. So before I go into what exactly the platform is all about, I'll just give a brief overview about what Vayana is all about and what exactly we do in this space. So, Vayana is India's largest fintech for trade finance and compliance. Okay. Over the years, we have built the rails that power B2B trade in India and beyond. As you can see in the slide, we have financed more than 35 billion US dollar across 25 plus sectors. It from automotive to textile, from electronics to infrastructure. So we have enabled over 300,000 plus MSMEs, the backbone of India's economy, and giving them access to working capital. We have supported more than 3,000 plus supply chains, and processed 8 billion plus compliance API calls. I'll tell you, these are massive and national scale system. And we were also the first cross-border trade finance platform licensed for regulated cross-border trade finance. And the important part is here that we have always worked hand in hand with regulators, banks, and corporate. And we know how to build such large scale infrastructure that institutions can trust. So when we started building this Vienna digital assets platform, it was not because that tokenization sounded cool. Rather, it was because we saw a massive, inevitable shift coming in how trade, credit, and investment are going to be structured globally. So, if our first decade was about enabling supply chain finance in India, our next decade is about enabling how to tokenize this global capital market. And Vienna digital asset platform is the bridge that takes us there. Now, coming to why now? So, I'll tell you this is one of the most important questions that we receive from various prospects, various banking executives. So, I'll tell you tokenization as an idea has been around for years. And why is that suddenly? Why we are talking about adoption at scale? I'll tell you, and also mentioned here, four structural shifts are there. First, now the regulation is ready. Singapore's MAS, the Monetary Administration of Singapore. So they have their project Guardian. They have been working with Citi, HSBC, and even the World Bank. European Union has launched MiCA regulation, markets in crypto assets regulation, which is giving kind of a single passport to issue tokenized assets across 27 countries, similar to the Shenzhen visa. This comprehensive framework created by you also to establish consistent rules across all the members of digital assets. In a way, aiming to ensure that the consumer protection is there, market stability is there, and also the financial innovation within the crypto industry is coming going on. United Kingdom's FCA has a digital securities sandbox. Recently, US passed the Genius Act, the first federal stablecoin law. Even in India, my home country, our unified regulator IFSC authority is also running tokenized bond pilot. And I'll tell you, this was not the case 5 years back. And that is the most important, that the regulation is now ready. Now coming to the second stage, that is the liquidity needs have to be exploded. You, as you are working in this space, specifically, you know the private markets are specifically fragmented, illiquid, and slow. So that's the reason behind all the institutional investors or any type of private credit investor. They are now looking for fractionalized access, 24/7 liquidity. For example, in Asia, if any family offices want exposure to global debt product without this long settlement cycle, let's settle in Europe or in the Middle East, then also they can easily access the same. Any sovereign funds want fractional exposure to global real estate or any other infrastructure product projects, they can easily access through tokenization. Third, institutions are demanding it, not from the corporate side, the need are coming. So, as you know, recently also BlackRock, Franklin Templeton, UBS, HSBC. So these are some of the most conservative and traditional names in finance, and they are now leading the tokenization pilot. And that's the proof that the market is now emerging and the market is real now. And fourth, the infrastructure also has matured. So the custody providers are institutional grade. KYC, KYB is embedded in digital identity framework. Before tokenization, all these stuffs are kind of embedded. Now, new type of blockchain-based currencies like stablecoin, regulated CBDCs are already providing safe settlement rail. So the rails are ready. So in a way, these four forces like regulation, liquidity, demand, infrastructure, all have clicked together in the last couple of months. Not I'll say couple of months, from the last 6 months. And that's why this is no longer about pilots, it's about production. Now coming to what is tokenization is all about. I know you guys have already understood what is tokenization, so I'll break this down in a way that's easy to picture. Okay. So in a way, tokenization is the process of taking an asset and representing it digitally on a secure programmable ledger. And here the ledger is blockchain. Just think of how this demat shares transform capital market. Suddenly you could buy and sell with a click rather than handling all these paper certificate. Tokenization in a way takes that logic to the every other asset class, not only for the share certificates or this paper certificate for bonds. So for example, just imagine a corporate bond. Okay. Today the issuance of a bond by a paying agent like bank, okay, it takes week. Settlement takes days or might weeks in emerging countries. Compliance checks are manual. From the monitoring aspect or reporting side, it is totally fragmented. As we are working in the debt capital market space, we know what exactly the problem statement that we see on the daily basis. With tokenization, you can issue a bond as a token on blockchain. All the coupon payment can be automated through smart contract. If you have any compliance rule specific to any jurisdiction, that can be embedded and the settlement can be instant. Or just think of any real world assets like real estate or any type of properties. Today, if you buy into any grade A office tower or grade A apartment, okay, you requires millions just to buy that flat. But tokenization allows fractional ownership. You can invest just near $1,000 or $500 and still be a part of the owner of the asset. In a way, just think of one guy from Bali, Indonesia can get a slice of an apartment in New York, Manhattan. So this is the kind of the benefits can be measurable. As I have mentioned, efficiency, real-time settlement instead of this T plus 2, T plus 4. Cost savings are there because CT, BCG already everyone kind of estimates. Tokenization can cut bond issuance by up to 90%. Now coming to transparency, blockchain. So every transaction recorded in blockchain that is immutable. Liquidity side, assets that were once locked up like private credit, real estate, or any type of like paper, like any type IP rights or musical royalty, everything become tradable now. I'll fondly called it a demat on steroids. Okay, and by 2030, BCG also estimates that nearly 10 trillion US dollar worth of assets could be tokenized. So it's not like any fiction or science fiction. It's a realistic trajectory that we are proposing here. Now coming to what can be tokenized. As you can see in the slide, that the beauty of the tokenization is that it's asset agnostic. If an asset has ownership, value or legal enforceability, it can be tokenized at instant. Let's look at some real example. Debt and bond, as I have already mentioned. Also, last year UBS issued a 375 million Swiss franc tokenized bond on an exchange. Faster issuance, lower cost, instant settlement. Coming to fund, many companies, mostly the traditional finance companies like Franklin Templeton, BlackRock, Ondu Finance, they have already tokenized US Treasury bill funds. Today, nearly $1 billion plus of these tokens are live and trading on chain. Commodities also being tokenized, like physical gold stored in London Vault, recently tokenized by HSBC. So in a way, investors across the globe could own any fractional gold without moving it physically. Real estate side, specifically in the GCC region, regulators have already approved pilots where these global investors can buy fractional stakes in its luxury properties. Singapore, Malta, Cyprus, Switzerland, everyone is piloting similar models. Also, a few states in US. Equity and deposits. Switzerland is leading with tokenized equities. Recently, that Nasdaq filed a paper with SEC that it's going to tokenize stocks or the equity share. So now the US citizens have two options to choose: traditional shares or tokenized shares. Then intellectual property and art, music royalties, movie rights, any type of painting, Picasso painting you have. Investors are using this tokenization infrastructure to monetize and diversify portfolios. So in a way, the question is it's not what can be tokenized. The real question is what will be first in your portfolio. So that is the real question now. Okay. So now I have mentioned what can be tokenized, but as a decision maker, I believe when we talk about tokenization, one of the questions I always hear from decision makers or CFOs or CIOs or treasurers specifically, what changes in my day-to-day numbers? The truth is, I'll say from my experience, that tokenization wins not because of technology, but because it delivers hard improvement in business metric. Okay, so let me break down these five of the most important CFO level KPIs as mentioned in the slide. So first, that is time to issuance. So as I have mentioned, in traditional market, when you are launching any bond or securitization, it can take 4 to 6 weeks. You need arrangers, you need clearing house, you need custody provider, multiple reconciliation being done. With tokenization, UBS already showed this can be cut to days. Okay. For a CFO, this means faster access to capital, less opportunity cost, more agility in treasury management. Now coming to settlement speed. Traditional settlement cycle, as you know, that run on a T plus 2 or longer cycle. That means your funds are already locked in. Okay. Your credit risk is higher. Counterpart is still wet. Here, the tokenization exactly what enables? It enables atomic settlement. Your cash means the blockchain based currency and the asset. Both legs move together in real time in one rail. For example, recently, if you know JP Morgan says Kinexis platform tested tokenized repo trades settling instantly, saving billions in intraday liquidity cost. So just imagine what that does for banks or funds who have been managing billions in daily flows. Okay. Then coming to minimum ticket size. Uh, if you want to invest in a private bond, then retail investors have no way to invest. Mostly the institutional investors are investing. The minimum ticket might be 100,000 US dollar or more, and that restrict access to only large institutions. But what tokenization allows, it allows fractional ownership as low as $1,000. Even $100, I have taken ownership in a Dubai based real estate properties. Franklin Templeton's tokenized US Treasury Fund, which is inaccessible to all these retail guys. Okay, so now they have kind of fractionalized in a manner that any retail investor or any HNI they can participate seamlessly without any differentiation. So in a way, this broadens the investor pool, improving the liquidity and the fundraising outcomes. Now coming to reconciliation break. So as you know, traditional finance runs on multiple ledgers. There is a issuer, there is a custodian, there is a exchange, there is a settlement bank. Sometimes also there is OTC traders and market makers are becoming involved. So in a way, this creates a intermediary mismatches, reconciliation delays, and operational cost overhead. What tokenization provide? Tokenization provide a single shared source of truth. That decentralized ledger, that blockchain itself is the final record, or you can say it is a golden record for the same. So for CFOs or for the treasurers, that means fewer back office costs, fewer disputes, faster audit, and more trust from the investor. And coming to investor reporting, today I believe that you know that investors mostly get quarterly statement or monthly statement, or if you need any update, instant update is not getting received by the investor. But with tokenized product, that is not the case. Reporting is real time on demand. And so, example, if you have a stake in Franklin Templeton recently launched tokenized money market fund, okay, your on-chain fund updates or the net asset value you can receive instantly. And the same time, any type of investor, it might be retail investor, it might be institutional investor, everyone can see holding transparently at any time. And so, in a short, I'll put here in a summarized version that tokenization is not about any fancy blockchain based use cases. Rather, it is solving a real problem. It's about time, cost, liquidity, control with the investor, transparency, all the five things that every decision maker like CFO cares about. Now coming to, as I have mentioned that in multiple region and jurisdiction, it is gaining traction. But I'll tell you one of the biggest hurdles for institutions has always been regulation. And the good news is that regulators across the world are not just aware of the tokenization, they are actively enabling it. So let me give you a global tour. So in US, as you can see, in 2025, recently only, the Genius Act became the first federal stablecoin law. So in a way, it requires 100% reserve backing monthly disclosure so that in a regulated fashion, the stablecoin based tokenization solutions can be launched. And I'll tell you, this gave institutions the confidence they need. And post law, we can see the crypto market cap jumped past nearly 4 trillion US dollar. And on the security side, also we can see SEC is also approving tokenized fund pilot, not only the bond pilot, okay, with regulated asset manager. UK's FCA already launched the digital securities sandbox, and where banks, funds, fintechs can issue tokenized bond, tokenized equities under supervision. In a way, this positioning London as a hub for tokenized securities, because as you know earlier London also became the hub for the euro bonds, and now they are taking the center stage for tokenized securities. Europe's MiCA regulations, as I have already mentioned, it is now fully in force, covering all the issuance, custody, stablecoin, and the secondary trading part. In Middle East, UAE taking the center stage. UAE's multiple regulator like ADGM, VARA, DMCC focusing on the commodity side, and VARA focusing upon the traditional security side tokenization. So all are kind of rolling out tokenization framework for multiple types of assets. They are also tokenizing Islamic finance instrument like Sukuks, Murabba. Bahrain, Saudi Arabia also piloting tokenized bond and Islamic finance instrument and aligning with Sharia compliant framework. So slowly, Middle East also pushing to be a global leader here. In India, my home country, we can also see our unified regulator IFSC authority is already started allowing pilots for tokenized bonds and CBDC based lending process. And in a way, India has the advantage of scale with millions of SMEs and corporates that could benefit from all these kind of use cases. And in overall Asia, if you can see in Singapore, in Hong Kong, Hong Kong Monetary Authority, they have also grown to global institutions. They have been testing with development financial institutions, also with players like BIS, SWIFT. So they have been also testing tokenized funds, tokenized fixed income instrument. Also, we can see tokenized renewable assets, tokenized GPU. So new kind of tokenized illiquid assets are being kind of tested. And I believe that APAC region, specifically Singapore and Hong Kong, perhaps the most advanced regulatory sandbox globally. So the big picture that you can see, regulators have already realized tokenization improves all this transparency, efficiency, and investor protection. And they are no longer thinking from the point of view like wait and see. So they are now saying let's build together. From our experience in working with regulators or working with FIs, so everyone is kind of jumping into the bandwagon. So when the green light will be there to experiment, to launch pilot, or you can say to scale with confidence. Okay, these are the few examples that the bigger FIs are kind of doing. I've already mentioned. So BlackRock's recently launched tokenized money market fund, Franklin Templeton's US Treasury fund tokenization, UBS, HSBC, Ondu Finance. So all the other pilots, like I have also mentioned in Dubai, tokenized land. Recently, they have totally kind of started a project that all the lands coming from Dubai that will be tokenized, and that there will also be a registered property that will also register on the blockchain itself. So all these kind of tokenized real estate projects are enabling fractional global ownership of prime Dubai based properties. And what exactly common in all of this? Everyone improve in all of the use cases, they improve the speeds like the settlement part, reducing the cost, boost the liquidity. Okay, so now coming to the platform, and which brings us to our flagship product. What exactly we are doing in this space, the Vayana Digital Assets platform. So I'll pass it to my colleague Vedant here. So he will explain that what are the modules of this Vayana Digital Asset platform, and he will also happy to give a demo of the solution. Yeah. Over to Vedant.
Thanks a lot, Nihar, for the wonderful introduction. So, now that we have understood the broader context of tokenization, why it matters, why now, let me introduce you to our own platform, the Vienna Digital Assets Platform, or VDAP in short. So VDAP brings together all the new age solutions we have been building over the past few years. Our flagship module, which is the tokenization of real world assets, which creates compliant, programmable tokens for assets such as bonds, funds, loans, equity, real estate, commodities, and many more. Then we have a trade docs platform, which is a digitization of cross-border trade documents and leverages MLETR and trade trust to make trade documentation legally recognized and fully digital. Our upcoming solution of deep tier supply chain financing extends financing beyond the direct suppliers, ensuring that the liquidity flows down the supply chain. Then we have our securitization of trade receivable solution, which allows pooling and tokenizing the trade receivables or invoices into structured and investable products. So all these modules are designed to complement and extend Viana's conventional supply chain financing systems, creating a bridge between today's market as well as tomorrow's digital infrastructure. But today, our focus is on our flagship module, which is the tokenization of real world assets. So, what we have built is more than just a technology layer. It's a complete infrastructure that enables banks, corporates, funds, fintechs to digitize, fractionalize, and manage real world assets in a compliant and settlement ready manner. So, whether it's private credit, equity, funds, real estate, commodities, VDAP makes these assets digitally native while ensuring the regulatory, legal, and operational requirements are everything is addressed. So this is the foundation for the next era of digital capital markets. So, why is real world asset tokenization our flagship? So, because real world assets like bonds, equity, funds represent enormous pools of untapped liquidity. Today, these assets are often illiquid, expensive to issue, and difficult to distribute. Tokenization changes all of this. It makes assets compliant, programmable, and accessible at scale. On VDAP, tokenization goes far beyond the technical wrapper, as I mentioned. So we use permissioned ERC 3643 compatible tokens so that compliance automatically gets built in. Then tokens come with a programmable life cycle, so automation of dividends, interest, and other coupon payments. So all those things are addressed. Then we support wide range of assets. So I've already talked about the types of tokens we can issue for bonds, equities, funds, gold, and many more. And finally, most important, we are already future ready on the settlement side. So for settlements, we can use stable coins, the traditional fiat payment rails, and also in future we can integrate CBDCs and deposit tokens. So this is why the RWA tokenization is at the heart of VDP and our flagship offering. Next, we move on to how do we ensure the compliance is embedded at the token level. The answer to this is ERC 3643. This is the industry's leading standard for permission tokens. With ERC 3643, compliance is directly encoded into the asset. So, like investor eligibility is attached at verifiable claims level. So, only qualified wallets can hold or trade those tokens. You can embed transfer restrictions, you have jurisdiction checks, lockups. A lot of different compliance aspects can be encoded into the token itself. So what this does, this gives confidence to the issuers that every transaction is regulator friendly. For investors, it means that there is trust that the assets are auditable, portable, and enforceable from the day one. And since ERC 3643 is EVM compatible, our tokens can integrate across multiple blockchains and multiple marketplaces instead of just being locked into a very small system. On top of that, there is other practical benefits like simplified cap table management. There's real-time balances which can be viewed, or automatically reconciliation can happen. So a lot of inherent benefits in tokenization. Next, let's look at what a compliant tokenized asset on VDAP actually consists of. So we have five different layers. So first one is the legal layer. So each issuance is wrapped with the right legal structures. You'll have trustees, SPVs creation, and much more to ensure that the tokens carry enforceable rights. Then we have the data layer. So issuers and investors get access to deterministic cap tables, real-time balances, and reconciliation. Then we have the compliance layer. So rules like investor eligibility, transfer restrictions are embedded directly into the token, as I mentioned earlier. Then we have the automation layer. So because we have programmable smart contracts, so all the things like dividend payments, interest payments, everything can be programmable, and that automates all the manual steps which happen in the current day-to-day activities. And finally, we have the future ready settlement leg where we can integrate CBDCs and deposit tokens, stable coins, and fiat payments. So, who is the target audience for all these solutions? So, VDAP is built specifically for institutions. So, banks and NBFCs can issue tokenized assets like bonds, which lowers the cost while actually reaching out to a broader investor base. Then we have corporates who can issue tokenized receivables, trade documents, and locking working capital faster with more transparency. Then we have asset managers and funds. So they can create tokenized investment products, enabling fractional distribution and real time reporting. And finally, fintechs and marketplaces, so they can directly plug in to our interface and our smart contracts and launch new distribution models and secondary markets without having to build the infrastructure themselves. So across the ecosystem, VDAP delivers value where it matters the most, at the cost level, compliance, liquidity, and finally the efficiency. So next, we move on to the demonstration of the platform. So for the demonstration, we'll be demonstrating a bond tokenization case. So Nihar, I would request if you can just stop sharing your screen. I can put up my screen. Okay. So basically, in a tokenized bond lifecycle, we have split into four different modules. So we'll start with the onboarding part, where there will be a sign up process, acceptance, then profile completion, whitelisting, all those things on the onboarding part. So yeah, this is a quick sign up page which requires a few details from the issuers or investors who want to participate into an issuance. So details are filled in and a request is sent to the platform admin, who will review the same and allow the participant onto the platform. Once that process is done, the issuer or the investor will come on the platform and complete a basic profile. So this is the user profile. We have also integrated different KYC providers who can help with the KYC KYB aspect. Then the next step is completing the company profile. Some basic details of the company are taken in, and this will help on the KYB front, where automatically a lot of information will be pre-filled. Then the next step is to connect the wallet. So the wallet will be connected. We have multiple different integrations like Wallet Connect, MetaMask, and other custody wallet providers can also be added. And finally, because we also support traditional fiat rails, so that's why we can also take in a bank account details for notifying the investors as well as the issuers where the payments need to be made. The next part is the bond origination part. So in this module, we will create a new bond request. There will be a credit assessment process which will happen in the background. And once that is done, the platform operator will just fill up the details of all the bonds. And finally, the borrower will accept the terms. So let's quickly go through this module. So the bond is selected, some basic details of the bond are filled in. This is done by the issuer. And once this is done, they will have a credit assessment happening in the background. And the platform operator will then come on the platform and fill in a detailed uh, term sheet in a way where all the details of the bond will be filled in. So we start with the token details, like the token name, number of decimals that are permitted, all those stuff. Then we have the issue details. So this will have details like when is the funding period starting, what is the credit rating, any covenants. So all those basic bond details will be added. Then we have the most important part where the term details of the bond will be captured. So this requires all the interest rate, the tenor, the payment frequencies, any overdue penalties, and a full-fledged bond repayment schedule will be generated. All these fields are obviously editable, so it can mimic the bond information memorandum. Then we move on to the compliance part. So on the compliance part, we can enable a lot of different features like whether investors KYC is required or not required, what kinds of investors can participate, like institutional, accredited individuals. Then we have jurisdiction checks. Uh, what kinds of what is the minimum investment amount, maximum investment amount. So a lot of different compliance fields can be entered, and obviously this is also customizable. We can add more, remove some of them. So all this can be performed on the platform. Then the next step is the bank details part. So the bank details where the funds need to be transferred will have to be captured, and then we move on to the documentation part. So on the documentation part, we can upload a lot of different documents for the particular issuance. Like for a bond issuance, you may have some material which can be shared with the investors, like the information memorandum and other credit assessment details which have been performed. So all these documents can be easily uploaded, and then we have a public view where the investors can access these documents. Once this is done, all the details are reviewed by the platform operator, and if the review seems fine, they can submit this particular request. uh, on the platform, we have maker checker built in, so every request which has been created will have to be approved by another person from the same company. So there will be a maker checker for all the steps. So right now the bond term sheet is getting submitted. Now we go on to the borrower acceptance step. So the borrower will receive a notification to come and review the terms of the bond, and once they are fine with the terms, they can accept the terms, and the bond will be live for subscription. So this is the acceptance part. So all these details are actually going to the blockchain. None of the private information is going, like the documentation or any other details which cannot be exposed on a public blockchain. But all the details like the schedule, interest rate, so all those things will be going on the blockchain. Here is a snapshot of how the transaction hash looks like on the block explorer of Hedera. Now we move on to the investment part. So we have already onboarded the investor. It was very similar to the onboarding process we saw earlier. The investor will be able to see different opportunities which are live on the platform. They will click on one of them and more details will pop up. So here is the bond dashboard where they can see the basic details of the bond. They can drill down to all the specific details like the credit rating and the schedule part. Then we also have access to the document vault, which I talked about earlier. Then the repayment schedule according to their contribution will be visible below, and now they can come and invest. So they can enter the amount of tokens they want to subscribe and select the bank account which they'll be using to make the payment. So once this is done, intent gets created for the investor, and the platform operator will review the intent, get all the documentation part going, and once that is done, the investor can make the payment and finally upload the payment proof on the platform. This payment proof will be verified by the platform operator, and once that verification process is done, the investment will be confirmed. So this, yeah. Now this is the platform operator's view where they can look at the payment proof and finally approve the investment. So all the actions which are happening on the platform are recorded on the blockchain, which gives us the core benefit of using a blockchain of that is immutability. So every transaction is recorded on the blockchain, and here are a few transactions where we have also shown how it looks on the block explorer. Next part is on the issuer side. So on the allotment date, the allotment process will be completed. So at this point, the tokens will be minted to the investors as per their share, and then these tokens will be tradable. They can be listed on secondary exchanges, transferred peer to peer to other investors. So all those things will be happening right now. So the bond is active. The issuer is supposed to make timely payments as per the schedule. So because we also have a full-fledged end-to-end servicing lifecycle also built in. So we track all the repayments. If the issuer is missing any payment, we track defaults, NPS. So everything is covered on the platform. We also have many other features like extending the funding period, penalty waiver offs, writing off a loan. So a lot of different features are also built in. So on your screen right now is the repayment process where the issuer is making the repayment and uploading the payment proof, which is then again reviewed by the platform operator and finally accepted. So here was a very quick demonstration of the platform. I'll again quickly ask Nihar to take over the stage and continue with the rest of the presentation.
Hello. Yeah. Yeah, thanks, Vedant, for the walkthrough of the platform. Just give me 1 second. I need to share my screen. Please do it, Vedant. Yeah, perfect. Okay. So let me bring us back to the bigger picture, that why we built this Vana digital asset platform and where actually it's headed. Okay. So tokenization at its core is not just about creating any digital representation of assets. Rather, it's about, you can kind of think of how to transform how the financial markets operate now, from the issuance to trading or from the settlement to reporting. And our vision with Vana digital asset platform is very simple yet ambitious, to take institutions not only in market, rather kind of take to the market, not in the tokens, rather take it to the markets. Okay. So let me explain this in the three stages that you can see in the slide. So right now we are building the foundations. Okay. We have kind of focusing on giving institutions a complete, compliant and modular infrastructure so that you can issue and manage tokenized asset. Any banks or NBFIs can launch tokenized bonds, securitized product, trade assets at a very lower cost and with automated settlement. So I'll give you just an example. Any private bank, let's based in Dubai, okay, they could issue any tokenized MSME loan pools in Singapore and reach international investors in Brazil without building any new infra. By using VDAP, Vana Digital Asset Platform, we can provide you the same layers. Okay. Any asset managers or any fund managers, you can tokenize your fund, you can enable fractional distribution, we can provide real-time reporting to investors. Okay. And or if you are a corporate, then as a corporate you can tokenize your receivables, you can tokenize your trade documents, okay, on our platform, and sell the fractional slices to your investor. In a way, it will reduce your dependency on a single bank's credit line. Or if you are from any fintech or marketplace, if you look forward to plug into vida via a digital asset platform via apis, then also we can build secondary marketplace or launch your own white label investor platform. So in a way, you can understand that today Vayana Digital Asset Platform is your turnkey solution to tokenize any type of real world asset. It might be debt, it might be fund, real estate, commodities, music royalties, IP works, or any type of receivables with compliance and life cycle automation built into the platform. Okay. Near term, actually, our focus on creating interconnected marketplace, because only providing tech platform will not solve the problem, as I have already mentioned. So in near future, we see Vayana Digital Asset Platform as the distribution layer for tokenized asset. So just imagine issuing a tokenized bond in DIFC Dubai and having it instantly discoverable to investors in London, in Singapore, or in NYC through connected marketplace. Or if you are a family office in UAE subscribing directly to a tokenized Indian infrastructure debt product, then VDAP can do the settlement in seconds via regulated stablecoin or regulated CBDC. So this is the kind of network effect we are looking forward to put on as more issuers or investors coming on board, and planning to build VDAP becomes a liquidity bridge across the jurisdiction. Okay. So in the near term, our value is fully clear: creating interconnected marketplace where distribution is faster, bring more investor reach, and cross-border liquidity will be there. And in long term, our focus on orchestrating kind of a whole global token network. And this is where I'll say it gets exciting. Okay. So in a way, the tokens issued on VDAP via a digital asset platform won't live in silos. They will be portable across multiple chains. So currently our platform is live in Polygon, Hedera, and Ethereum because we are building on ERC 3643, but slowly we are going to make our platform portable across multi-chain. So just think of from a point of view that a tokenized real estate issued in UAE trading seamlessly on a European secondary market like Six or Bybit or any type of platform. Also, we are thinking from the long-term perspective, settlement via CBDCs or stablecoin. So as we are seeing wholesale CBDCs or multiple stablecoins being rolled out, VDApp can be easily integrated with them, enabling instant and atomic delivery versus payment globally. And regulated DeFi liquidity pools through which we have been partnering with. So any hedge fund in any part of the world, they could stake this tokenized US treasuries and then connect into any regulated DeFi pool for short-term yield and with full compliance built in. So I believe so. You might think it is kind of a futuristic fantasy, but it's already happening. Okay, in multiple parts of the world. And I'll tell Vayana digital asset platform is built to take them from not only in sandbox rather to a scalable product. Yeah, so this is the way we have built, as also Vedant mentioned in the earlier slides, that we are uniquely positioned, not providing only the tech platform, we provide the legal layer, compliance fast platform through our ERC 3643 compatible standard, embedding digital identity, transfer rules, and with our rich experience in capital market space, we know how exactly these tokenized securities can be tradable. And platform is fully flexible for multi-assets, as I have already mentioned. And we connected to multiple jurisdictions, regulatory sandboxes that will give you a first mover advantage. And we are future ready. Yeah, so our vision is not just to help you tokenize assets, rather in a way to help you to create markets where those assets are issued, distributed, discovered, and in the same time traded through multiple asset traders, okay, and settled also seamlessly. So that is our journey from tokens to market. And this journey we are building. Happy to onboard you if any opportunities arises. Yeah, so with that I'm closing my thought on this. Okay, and the question is no longer if the tokenization will transform any finance, or so it's when or who will lead. Okay, on behalf of Vedant and myself, thank you for joining us. So we'll now open the floor for question. So if you have any kind of questions with respect to the slide or with respect to the content that we have shared, please put in the Q&A section. Happy to answer this.
So I can see a few questions. So first is this a SaaS platform? Yes, absolutely. This is a SaaS platform. We have also actually elevated this to a multi-tenant SaaS. So instead of like one instance for every client, you can also have many instances running on the same infrastructure. If you are like a marketplace operator and you have many different issuers, you want different instances for every issuer, that is also completely possible on our platform. Okay. Then next is, do you also support in regulatory clearances? So yes, we have legal partners in multiple jurisdictions to launch your compliant tokenization platform, and we can also help in structuring your product. Then we have another question. So, is VDAP blockchain specific or can it work across chains? So, it is actually blockchain agnostic. We are compliant with almost all EVM chains. So, because we operate using the ERC 3643 tokens, we are restricting ourselves to EVM chains for now, but we are also open to other types of blockchains. So, yes, we support multiple different blockchains. Then uh, do you also solve the liquidity problem? Tokenization is often criticized for creating tokens that nobody trades. So that's actually a very valid concern. So our approach is not just to like issue tokens, it is also to connect assets to regulated liquidity pools and marketplaces. So, as Nihar mentioned, in our near term or long term, we want to create a completely interoperable market where you can issue tokens anywhere, trade it anywhere, like a completely open marketplace. So, that's where we are heading. And I can see one last question. What stage is VDAP currently at? Is it already live? Uh, yes, VDAP is already in production. We have multiple clients across different geographies like Hong Kong, Singapore, UAE, Europe, as well as we are in active talks with a few of the clients in the US as well. Some of our other offerings like the deep tier supply chain finance and securitization of trade receivables. So that is currently under development, but that will also be live very soon. Okay, I can see no more questions. Do you have any questions? Please put it in the chat.
Okay, so I believe that there is no more questions coming from the attendees. So on behalf of Vedant and myself, I'd like to thank you all for joining us today. We truly appreciate your time and engagement for joining this call, joining this webinar. Whether I would be very happy to connect further, dive deeper into your specific use cases, and explore how Vana digital asset platform can fit into your strategy. Please feel free to reach out to us after this session. We'd love to continue the conversation. Before closing the session, do keep an eye out for our future webinars, specifically on tokenization, stablecoin, and CBDC use cases, where we'll continue exploring all the real-world applications of tokenization. And also, please follow Vayana Digital Asset Platform on LinkedIn to stay updated on our latest insights, events, and industry news. Yep. Thanks all. Thanks, delegates.